But moving on now, let's get a conversation going on. We are in the middle of the earnings season and Mahindra Holidays has posted Q4 numbers with good operational improvement. EBITDA has also jumped on a favorable base and operating leverage. Kavinder Singh, who's Managing Director and CEO of Mahindra Holidays, joins us now. Mr. Singh, a very good morning and thanks for joining us. This is Pavitra. I'm going to come to all of your financials in just a bit. But first off, I want to begin by asking you about how the occupancy has looked in the past month. We do know that Jan and Feb were, of course, hit by Omicron. What is the kind of pickup that you saw in March?
So the good news is that the occupancy in the month of March was the highest ever for us at 89%. And by the way, I can even share with you the April occupancy. That also stands at 89%. So that's something that we are very happy about. And even if I were to look ahead, because we open our bookings 4 months in advance, May and June are looking at similar levels.
That's great to hear, Mr. Singh. What is your current unearned revenue, and therefore what is your expectation of the kind of revenue growth you'll have for FY23?
So, as you know that, you have used the word unearned revenue. Actually, we use the word deferred revenue, and that's very much there in our balance sheet. It's above 5,000 crores, and that is something that will keep accruing and over the years. And if I were to look at our, income growth, you may have seen that we, at a year level, grew by about 18%, at a quarter level by about 19%. The income growth has been very, very, encouraging, largely on the fact that our resort income growth has been very good. Our income growth through the vacation ownership income came out very well. And of course, there was a one-time impact because we were in a position to sell our stake in XOXO Day, and that gave us a one-time kicker. But even if I were to remove that, our profit before tax jumped by about 38% for the quarter, and for the full year we have grown by 20%. So if I were to looking ahead, I think the fact that ours is an annuity business model, the fact that there is a resort income that keeps growing as we add rooms, and we added about 850 odd rooms in the last 2 years during the pandemic. So definitely we do see an uptick in the income as we move ahead.
All right, Mr. Singh, let's get you on 2 points now. What is the room addition you are targeting for this year? That's for FY23, and also the member addition. The last couple of years, you've done that in the vicinity of closure on what, 12,000, 12,700, very, very roughly. Both the past couple of years have been impacted. At least one or more than one quarter has been impacted because of the pandemic. Thank God that's behind us now. So we're looking ahead. What should be the rough addition you're looking at for this year? Go ahead.
So as far as the room additions go, as I mentioned earlier, we had about 850 odd rooms that we added in the last 2 years. We stand at 4,568 mark. We have already gone on record saying that we would be doing 5,500 thereabouts in about 2 years, 2.5 years time. And that should happen looking forward. As I look at member additions, actually, member additions also picked up smartly in March, and we see the same trends in April. So we are seeing definitely, tailwinds, both in terms of occupancies and member additions. And the key point for us is that while, everybody is got to deal with the inflation, but in our product, there is a built-in protection in terms of the fact that you have paid the membership fee, and therefore you are in some manner protected against the inflation. So that should give us further tailwinds in terms of, adding our members. So as we look ahead, we will definitely do better than the FY22, significantly better. That's what we are aiming for. And the trend in April has been good.
Okay, and Mr. Singh, if you're talking about, member additions, can you tell us how many renewals you saw and what is the kind of rate that you're seeing?
So the good news for us is that since the occupancies are very high, the annual fee is something that you need to pay to be able to enjoy the holidays at our resorts. So we have seen a significant amount of collections on the annual fee. And we do not use the word renewal rate in our case because people can sometimes renew a little later, and we have not seen any slippages there. And as you can see, our cash also moved up to 1,172 crores, which is a 232 crores up from the same period last year, March 31st of 2021 to 2022. That's the kind of movement we have seen. And obviously, the annual fee needs to be collected in time to be able to grow the cash to the level that we ended up growing.
And just one final question then. What is the plan with respect to this 1,172 crore of cash that you have on your books?
So there are very clear plans in terms of capital expenditure. we are clearly looking to increase our capital expenditure to about 1,200 to 1,500 odd crores. And that is something that we are very, very confident about, because we are planning to build a greenfield project in Ganpati Phule area at an investment of 250 crores. There's a capital expenditure plan going on at this time. 185 odd crores investment is happening in resort near Shimla and Kandaghat. We have 65 crores planned out for an expansion of Puducherry resort. So we have resorts being expanded, we have new resorts being created, and also a couple of targets on acquisition of resorts in India. So that should take care of the capital that we have, the cash that we have. Of course, we will continue to grow on cash because of the way we have pivoted our business model, where we focus on higher down payment, lower EMI tenure members, and ensure that members get to holiday and then they spend money at the resorts. So this is how we see the virtuous cycle continuing.
Thank you very much, Mr. Singh, for joining in. That is the word coming in from Mahindra Holidays. 89% occupancy in the month of March. So revenge travel is clearly back. And those trends have sustained in the month of April. And even May and June are looking very promising, according to the company. And they have a lot of capex planned in Ganpati Phule, which is in Maharashtra. They've got something planned, a resort planned in Shimla. They're looking at a few acquisitions as well. So they're aiming to grow the business. Get into a break on that note.